Now we will work out problems based on DRI and DRR. So read question very carefully. You have to see whether it is listed company, unlisted non-NBFCs. So depending on that, the DRR and DRI creation will vary. So as usual, read each and every word of your question very carefully. Illustration 4, page 10.13. Y Limited, a listed company. Listed company, should they create DRR? No. But they are supposed to create DRI. 50,000, that is number of debentures. The amount is 10 each. On 1st April 2018, they issued. Okay. So sometimes you will have to write issue entries also. Redeemable at par on 30th June 2020. See, we are going to redeem on 30th June 2020. So the redemption process will start on 31st March before this date, that is 31st March of 2020. Okay, that is if there is DRR creation. Here we don't have. Company received applications for 55,000, that is oversubscription. Allotment was done on pro rata. Debentures were redeemed on due date. Investment was made on 1st April, specifically given of the financial year in which redemption is due. Past journal entries for issue and redemption, ignore interest on debentures. So previous chapters issue entries also we will have to write now. Okay, so we will start writing journal entries, draw the format. Date column we need to have here because we have dates in this chapter to be written. Okay, so issue date is 1st April 2018. And what is issue entry? When you issue debentures, what are we getting? It will be bank account debtor 2, and here it is a lump sum method. Okay, before journal we had to write something. This is oversubscription question. So what should we do? The working note we have to write, that is total application money received. We are receiving application money on 55,000 shares. So the amount is 5,50,000. Yes, 55,000 shares. Less actual, always do a working note for oversubscription questions. Actual application money is 50,000 into 10, 5 lakhs. All these similar to chapter shares. So excess is 50,000. What should we do with this excess? They are asking you to do pro rata. That means you have to adjust with the next installment. But here is the company collecting in installments? No. We don't have next installment to get adjust or to adjust this particular figure. So what should we do? You can refund this. So normally in this chapter debentures you will not be having installments question. You will be having only lump sum, and there won't be any second installment for you to adjust. So what should we do with the excess? Refund it. Okay. Though they say like pro rata in the question, you will have to refund since there is no second installment. So that is the working note. Now we can start writing journal. That is, first one is bank account debtor 2. Since it is lump sum, you can write debenture, application and allotment account. Which amount will you write for the first entry? Just like we did for shares, take the first amount, that is 5,50,000. What is the second entry you are going to write? So this thing you can write application money received. Now the second entry, second entry on the same date, we will write debenture. So here we have to see like are we issuing debentures at premium or are we redeeming debentures at premium. Here nothing is given, like issued at 10 and redeemable at par. That means issued at par, redeemable at par. no new accounts to be opened, or if it is issued at premium, you should open 2 SPR. If it is redeemed at premium, you should open 2 accounts, 2 premium on redemption, and on the debit side, loss on issue. So, all these you have to check. Now, nothing to be opened. So, you write debenture application and allotment. Why did we write application and allotment? Because it is lump sum, but it is okay even if you simply write debenture application. Okay. But there shouldn't be any second installment. With that you should stop, or you should wind up. So, debenture application and allotment dated to percentage debentures. Here percentage is 10%. They have written a compound entry for the second one, but I will be writing separate entries. So, the second amount means, take it from your working note, which is your second amount, 5 lakhs. So, that we will write as the second amount. This is the actual amount you received, or you can write, sorry, not received, this is the amount you are transferring to debentures account. Amount transferred to percentage debentures, 10% debentures, or you can write debentures allotted, or you write like that, debentures allotted, you write debentures allotted and you transferred. Debentures allotted is enough. Then we will do refund, that is again on the same day, 2018 April 1st. We will do the journal entry for refund, not redemption. We will do the journal entry for refund. What is the entry? Reverse of first entry, debenture application and allotment account debtor to bank account, that is 50,000. Okay, so the amount we have refunded. Now you can write the narration, amount refunded. Yes, now we will move on to redemption process. So, redemption should be started with creation of DRR usually, but since it is a listed company, you don't have to create DRR. We will start with DRI, and the date is specifically given there, 1st April. 1st April of which year you will write? Is it 1st April 2018 you are going to do DRI? No. See the date of redemption first. You are redeeming on 30th June of 2020. So, before that date, on or before 30th April is the DRI creation. So, that means 2020 1st April, since it is specifically given like 1st April, you take 1st April, or else also you can write, only thing is it should be before 30th April. Okay, and it is not 2018 because the year in which we are redeeming is 2020. Okay, so 2020 1st of April we are going to invest in DRI. So, that is DRI account debenture. See, you should write the full term, that is debentures redemption investment. DRR is debentures redemption reserve. So, DRI account debtor to bank account. How much will you invest? What is the rule? 15% of total face value of debentures to be redeemed this year. Here we are redeeming altogether 50,000 into 10, 5 lakhs we are redeeming. It is redeemed together, it is lump sum method, not installments. So, entire 5 lakhs we will consider, and it is total face value of outstanding debentures, and the face value is 5 lakhs. You understood? It is 50,000 into 10, that is a issued number. Do not compute on the received application 55,000, what we issued is only 50. On that you should compute and consider the face value always. So, 15% of 5 lakhs, which is 75,000. So, that is DRI creation. Next we should realize the amount, and on which date will you realize? On which date do we need the amount? On the date of redemption. So, next is from here onwards the date of redemption we will write June 30th. We will realize it first, that means it is the reverse entry you are going to write. We are getting the amount by selling DRI, by selling your investment. So, same amount 75,000. You can write the narration, investment realized. Next what should we do? The cancellation entry we should write. It's on the same date, 2020, June 30th. What is cancellation entry? Percentage debentures, 10% debentures account debtor to debenture holders. How much will you pay the debenture holders? How much should we pay the debenture holders? How much did we raise from them? We raised 5 lakhs. Actually, we issued only 50,000, though we got 55,000 debentures. So, we have issued only how many debentures? We have issued only 50,000. So, what we are going to redeem is this face value of outstanding debentures. Understood? So, that is 5 lakhs what we are redeeming, because the excess amount what we received, we have refunded it already. So, what we are repaying now is only the face value, that is 5 lakhs we are repaying them. So, cancellation of percentage debentures that we did. The next is we will pay the debenture holders. So, that is debenture holders account debtor to bank account, 5 lakhs we will pay. Then the last entry is, so this is payment, okay, narration is payment made to debenture holders or amount paid to debenture holders. The final entry, all these will take the rate of redemption. The final entry, what it is, the balance in DRR, we will transfer to general reserve. What is the amount you have created in your DRR? Just see your first entry. Okay, in this question, being a listed company, we have not created DRR, so nothing to be transferred to general reserve also. So, you can just cancel this entry or you can write nil. Better you cancel it since we don't have DRR. Since we haven't created DRR, I accidentally wrote the entry. So, being listed company, we haven't created DRR, no. So, no, nothing to be transferred to general reserve. Okay, so in this question, we have issue entries, at the same time we have redemption entries also. So, issue entries means the previous chapter's entries we have to write first, the first two, then we will move on to the redemption entries. Okay. Next, we will do illustration number 6. So, you can close this and start illustration 6 now. Draw the format. Yes, so illustration 6, SRCC Limited, an unlisted non-NBFC. Did you see the term there? It's unlisted. Non-NBFC means they should create DRR, they should create DRI also. Company has 20,009% debentures of 100 each outstanding on 31st March 2019. These debentures due for redemption at a premium of 10%. So, when you cancel percentage debentures, this premium also you have to cancel. Then, company had a credit balance of 22 lakhs in their P&L, from which you can transfer to DRR. It's not necessary entire 22 lakhs to be transferred. What is the rule? You have to transfer a minimum of 10% of outstanding debentures. Instead of declaring a dividend, you underline the last sentence, which is very important. Instead of declaring a dividend, it decided to redeem the debentures. Meaning is the entire profit is being utilized for redemption of debentures. Understood? Instead of declaring dividend, meaning redemption is done completely out of profit. So, what is the rule in that case? You have to transfer 100% of face value of outstanding debentures. Clear? So, what is face value of outstanding debentures here. It is 20,000 into 100, which is 20 lakhs, and we will transfer 100%. That means entire 20 lakhs we will transfer from P&L. We have 22 lakhs, but as per the rule, now we will transfer 20 lakhs. That is 100% we are taking, since the redemption is completely out of profit. Here you can't take 10%. Okay, that's why I am asking you to read each and every word of your question. So if you write 10%, that is wrong. Past journal entries for redemption only, you need not write issue entries. So we will start. Okay, DRR creation we have to do first. On which date we are supposed to create DRR? For that, you see the date of redemption. We will be redeeming on 31st March of 2020. Okay, redemption is 31st March 2020. DRR must be created well in advance. That means 31st March before this date. 31st March before this date means 2019 March 31st we will create DRR. From where will you take the amount? From statement of P&L, which is given there. So statement of P&L account debtor to DRR. Okay, and how much you are going to transfer? 100% of your total face value, which is 20 lakhs. So 100% means the same amount. Entire amount 20 lakhs will transfer to DRR. So first step is over. What is your second step? You have to invest in DRI on or before 1st April. So on or before 30th April. So we'll assume the date as 1st April. Same year 2019 itself, because on 2020 we have to do the redemption. So 1st April 2019 we will do investment. DRI account debtor to bank account. How much will you invest? 15% of total face value of debentures to be redeemed this year. We are redeeming entire amount this year. So 20 lakhs into 15%, which is 3 lakhs. Okay. So next we are going to realize the investment, that is on the date of redemption. The date of redemption is 2020 31st March. So right, we are going to realize. So bank account debtor to, we will just write the reverse. Bank account debtor to DRI, amount is same 3 lakhs. Realized investment, that's the entry, the narration you can write. Next, on the same date we will cancel percentage debentures. Here percentage is 9%. Along with that, in this question you should cancel that premium on redemption, because here redemption is done at a premium. So if there was issue entry, we would have written there 2 premium on redemption, isn't it? So that particular premium account we have to cancel. So premium on redemption we will debit. Premium on redemption of debentures account debtor. To whom we have to pay amount? To debenture holders. You understood? Now percentage debentures, you have to remember one point. It will always take the total face value. Here the total face value is 20 lakhs, so we will write that. Then premium must be always computed on the face value. So here premium is 10%, which we will compute on face value 20 lakhs. So premium is 2 lakhs. So altogether debenture holders will be given, or should be given, 22 lakhs. Understood? Since it is at a premium. How did we write the amounts? Percentage debentures always take the total face value. So this is the total face value. Premium to be computed always on the total face value. So that is 10%, 2 lakhs. Then you write the credit side. The total of debit you can write on the credit side. So now we cancelled. Next we will make the payment, that is debenture holders account debtor to bank account. We will pay the amount. What is the amount here we are paying? 22 lakhs we are paying. Okay, debenture holders account debted to bank account, that is payment made. Finally, we have to transfer. So, all these dates you have to write, that is the date of redemption itself. Then the balance in DRR you can transfer to general reserve. Okay, what is the amount you created in DRR? You have transferred to DRR 20 lakhs. Nothing has been utilized. So, we can transfer the entire balance to general reserve. Okay, it is a safety measure actually to keep aside some amount in your reserves. It depends on the situation, like you can decide whether to utilize it or not. So, now we haven't taken anything from your DRR, so entire balance will be transferred to general reserve. Okay, so that is over. This is how you have to do questions with DRR and DRI. Then there is one more point. Suppose we are redeeming in installments. Okay, suppose the question is like this: altogether 10,000 debentures are there, but this year we are redeeming only 2,000 debentures. Okay, only 2,000 we are redeeming this year. Now we have created a DRR of 2 lakhs. If this is your question, usually the entire balance in DRR will be transferred to general reserves. But when you redeem in installments, you can't transfer entire balance to general reserve. What will happen? See, this year we have redeemed only 2,000 debentures. This is the number, okay, not the amount. This is the number. So, this year we are redeeming only 2,000. So, we have to take some more years, like here we will have to take 5 years to completely redeem this, isn't it? So, next year also we need to have balance in DRR. So, if you transfer entire 2 lakhs to general reserve this year, we won't be having any balance for the next year. So, entire 2 lakhs you can't transfer. In this case, only a proportionate amount will be transferred to general reserve. Understood? This should be considered when you do in installments. I just explain it. So that here the calculation will be amount to be transferred to general reserve. Here it will be not entire 2 lakhs, only the proportion you will transfer, and that proportion is computed like this: 2,000 debentures is what we are redeeming this year out of 10,000. The number of debentures is what you have to consider. On the basis of that, you will transfer a proportionate amount to general reserve. Next year, suppose you are redeeming the next 2,000 debentures next year. So, next year also you will do 2 lakhs into 2,000 by 10,000. Suppose next year you are redeeming 3,000 debentures. So, it will be 2 lakhs into 3,000 by 10,000. Understood? This is the amount in DRR which will proportionately transfer to which will proportionately transfer to general reserve. So, this thing you have to keep in mind, and this should be done if you repay in installments. Okay.